Good morning, everybody. Happy Monday to each and every one of you. My name is Gareth Soloway here for the game plan at verifiedinvesting.com. All right. So as always, folks, we're going to get into the nitty gritty of the charts. We're going to be looking at technicals, chart setups, trades for the day, as well as what is moving and what is kind of on the horizon. And let's start with that. So number one, this week, obviously, all eyes will remain on the Middle East with Israel and Iran in conflict. But ultimately, the key for this week is going to happen Wednesday afternoon. That's the Federal Reserve FOMC decision. No rate change is expected, but it's all about Jerome Powell's commentary. What is he going to say? Is he going to talk and maybe make markets think there's going to be rate cuts before the year end? Or is he going to kind of throw cold water on the hopes of investors and say, hey, listen, we still have to monitor what the tariffs could do to inflation? So that's the big event for the week that I'll be keeping an eye on. And obviously, big investors and institutions will be doing the same. Let's jump into the S&P futures here and take a look at what is going on today. And really what we saw over the weekend is the conflict continues between Iran and Israel. But remember, on Friday, what happens is when you have this, and I talked about this in the weekly wrap-up on Friday afternoon, is that people always get very nervous going into a weekend because the markets are closed. And so what we saw is some pretty heavy selling on Friday afternoon. Oil was pretty elevated because of the risks of escalation over the weekend. And obviously, people's kind of, the worst case scenario was running through people's mind, both for the stock market and for oil. What we saw is while the conflict still is going on, the worst case scenario is not coming to fruition at this time. And therefore, the markets are rebounding. Take a look at the S&P futures overnight, slowly grinding up, and rebounding from the drop on Friday. Now, one of the interesting little tidbits here, if I zoom out on the futures, take a look at the high here this morning on the futures. Look at this, guys. So this high right here that I'm pointing to, this was when the CPI data came out last Wednesday. And what we can see here is that that's right where the S&P futures rallied up and also where they've stalled out. Now, we'll see if we get through that high pivot there on the charts of the ES, but obviously something to monitor there. And just a cool thing to see how former pivot high becomes a pseudo double top. I mean, essentially that's what it is in the short term, a double top for the S&P futures that is being respected right now. We'll have to watch and see, does it get taken out? Now, the key here, folks, and this is the big key as a technician. So we're into this cycle period, right? Again, it started on Friday, really goes through about Wednesday when we're looking for this change in character. And what we're seeing today is a very good test over the next couple days of whether this cycle is going to have teeth. And the reason I say that is because on the daily chart of both the S&P and the NASDAQ, you broke an upsloping wedge. Upsloping wedges are bearish overall. We haven't confirmed the breakdown below the wedge yet, but let's take a look and see what we have. So if we flip over to the S&P, here is a wedge pattern. You can see you connect this high here to this high to this high, and then all of these lows from here to here and right through here, here, and here. And then look at Friday. Friday, we opened below it and we stayed below it. The first breaking daily close below this upsloping wedge. And the reason why upsloping wedges generally are overall slightly bearish is because as you kind of go higher, notice how the sharp steepest move is right here, right? Well, really, this was the steepest rally, right? Huge rally, consolidation, then second steepest rally, then a pullback, and then third steepest rally, right? And this one's the least. And the reason why is because slowly you're getting more extended. And so you're finding that less and less people want to chase the rally and more sellers are coming in. And that's showing a weakening overall strength of the S&P move. And so when you close below here, granted, there's no confirmed breakdown yet, but we want to monitor this very closely. Now, today we're, needless to say, going to have an up day. But what we see is this upsloping line is now up here. So we would probably have to close north of 6,050 to really close back on or inside of that wedge and potentially even push through here. So watch that today. Let's watch that very closely. The same thing can be seen on the NASDAQ 100. And I actually have the dotted line for where we are trading pre-market on the NASDAQ 100, right? So same wedge pattern, right? And here you can see very obviously we closed below. Okay, so look at today's price action. So yes, we're rallying on the QQQ, but it is far away from getting back to that line and recapturing the wedge pattern. In fact, you can see on the QQQ, we're just shy of Friday's high, and we're still net negative on the day. So the QQQ is definitely a concern here. It's the NASDAQ 100. And really, this breakdown, even if we have an up day here, this could still be the beginnings of a break lower. And the reason why I point this out is oftentimes after you break a wedge pattern, what will happen is you do what's called the retrace to the scene of the crime. You rally back to that level. And in fact, in the coming charts, we're going to see many situations where this actually happened. So you break down, then you have a rally back right into the underbelly of that wedge, and then the down move comes in. And so just be aware, if you get an update today, it doesn't really change anything unless we recapture the wedge pattern that we've broken to the downside. All right. So again, let's keep a very close eye on the NASDAQ, on the S&P. Of course, I will update you in tomorrow's game plan. Now, the dollar, here we have a good example of this to the downside, right? So we had a key break point here on the dollar. Now, this, I wouldn't call this a wedge. This was more just a drop in the dollar to a break point of this longer term. Actually, you know what? You could call this a wedge pattern, right? And why? Well, because if you connect this upper line here, this is a wedge pattern. Your biggest up move here, and then subsequent up moves here. You tag, come down, finally you break. And then what do? Do you continue straight down? Nope. You retrace to the scene of the crime, and then you continue down. And we can see right here, the trend line has broken again, right? So again, we had this beautiful line here, which was a longer term trend line. Look at how the market starts to respect a parallel, this low here to this low here, and then it bounces and then breaks. Now, this is another interesting trend line that has not been confirmed below. We closed below, bounced, retested, and down today. But to confirm, we would actually have to close below the low from last Thursday, this low right here. That would confirm the breakdown, essentially making it very unlikely that it's a fake out by the institutional money, albeit granted it is options expiration and triple witching, by the way, this week. So not only do we have the Fed decision, but we also have triple witching where there's lots of institutional games going on this week. All right, the 10-year yield. The 10-year yield is up slightly on the day here. We could see that it rallied on Friday, which was a little bit kind of suspicious, right? Because in theory, Friday with the conflict between Israel and Iran, you would have thought that yields would have gone down because Treasury demand was rising or should have been rising, essentially a flight for safety. That didn't happen. So again, just interesting little breadcrumbs that I continue to watch in the Treasury market and in the yields. But again, we bounced on Friday. We're bouncing up a little bit today. Overall, here's another wedge pattern that we broke below, retraced right there, and getting rejected. And you can see how these wedge patterns occur almost in every chart, and they behave very similarly, very, very similar. All right, we're going to move on to a few stocks in motion today. Oracle is down a little bit. This is a huge trend line, guys. Huge trend line right here. Notice again, Friday, and by the way, I'm on the weekly chart, but if we flip over to the daily chart, there's the daily chart. You can see 2 up days in a row, massively overbought from this low. You have negative divergence on the RSI as well. This, to me, is one of my favorite shorts of the week for a pullback. Now, again, do I think the top is in on this? No, I have no clue about that. But in the short term, should this pull back after such a dramatic move up on earnings 2 days in a row? Yes, this trend line should be respected and the RSI divergence. And ultimately, look at how it's rallied from this low of 121. In fact, if you go back here, 118 on a straight move from the lows of April 7th, it hit a high of basically 217 on Friday. All right, so think about that. Almost 100% move. The stock is now, the company is now valued at $600 billion. Incredible. But again, from these massive moves up, When you know what to look for, the probabilities increase that you can find a trade. And that trade for me is on the short side of Oracle, just for a pullback, probably to 200, right? So again, you can't deny their good earnings, right? I mean, I'm not trying to say that, oh, this company's done. No, this is a fantastic company. But should it have rallied this much and this additional much on earnings? Probably not. A pullback to, let's say, the 200 even number, there's 199 would be this gap fill right here. That makes sense to me. That's a retrace from a hit of major resistance. A retrace to 199 to 200 makes sense. Roku is up today. They signed an ad deal with Amazon. So Roku, again, rallying. This is where it's trading in the pre-market. It does have resistance here, but I don't have the guts to short it here. My first shortable level today would probably be around 85. If it gets up to this pivot here as a day trade, see this little pivot point right there, that would be my first level. I also want to just check in on the Fibonacci. Ooh, look at that, guys. You see that? So this is what I look for, right? Anytime I have a technical level, I usually try to see, and this is after a big move down, and then we're bouncing back. I usually try to scout out, is it a Fibonacci retrace as well? And here we can see it's the 618 is almost perfectly aligned with that level. So basically, a Pierce of 85 gives me additional factors for a day trade. Now, could it be a swing trade as well? It could be. But in all fairness, this stock, again, if we zoom out on the bigger time frame, look at how beaten down it is. I'm not apt, because of the potential for a short squeeze, to play this more as anything more than a quick day trade on the short side. An ETF that continues to rally today is URA, the Global X Uranium ETF. We know how much hype there is on the uranium front with these small reactors that are being built up. You can look at stocks like GEV, which granted has broken down in the recent off of another upsloping wedge, by the way. Look at that. But the point being is, look at the runs that these stocks have had. Oklo is another. This one's a smaller one that's done very, very well. We can see the run here on Oklo from April 7th. It was $17, trading today at $67. So these uranium stocks continue to be hot. The uranium trade continues to be hot as well. For me, this is where I start to scout out the potential for shortable opportunities. One thing I'm keeping an eye on here, guys, is a parallel. And if we look at this, right, so if you take this low from 2020 on the uranium trade to this recent low here, which was on that April 7th, and then we bring it up here, this could be an interesting level, right? So if we look at this, and interesting, I have a former trend line over here. We'll have to take a look, but look at, they're almost joining forces here, right here on this trade, right around this 40 to 41 level. And so for me, again, the parallel is important. That's technically important. And then if we zoom out here, let me just go to my weekly chart here. Let me see where that other trend line comes from. Yes, the pivot low right in here, right there as well. So again, extremely extended trade. This was, again, on April 7th, $19. So at that 41 level, it would basically be 100+% mover, vertical move up. As a trader, I'm going to start saying, okay, this is getting overdone. I'm going to start looking for a significant pullback on the URA. Just another stock in motion today. Take a look at Circle. This is a recent IPO in the stablecoin market area. And again, you could just see that this thing IPO'd at $69. It is now trading in the pre-market at 147. Incredible. Now, would I be a shorter of this? Maybe as a day trade, but not until I have a significant reversal signal on the daily for a swing trade short. And again, is it overbought? Yeah, it's ridiculously overbought. But on these type of shorter term trades or shorter term back testing ability, remember, this thing just debuted 2, 4, 6, 7 days ago. Today would be the 8th trading day. And so you don't have a history of data to use that can guide you to where these pivot points will be. And so what do? Well, you have to sit back and actually wait. So what am I looking for? I look for a reversal engulfing candle, a topping tail, something like that would give me something to trade against, right? So where I could say very obviously, okay, topping tails, heavy volume, that's a reversal bearish signal on the chart as a swing trade. Now, as a day trade, you can find that intraday, which is what I'll be looking for today. But again, just incredible movement in some of these names. Palantir's another one. It's up again today. I think it's at all-time highs as it just continues to be a monster mover. All right, let's get into the commodities. We're going to start with oil today, guys, because oil, again, it is in play because of what's going on with Israel and Iran. And we can see, again, big pullback today on oil. Remember, this is something I went over in the Friday weekly wrap up. And again, I do that Friday afternoon going into the weekend, so everyone has kind of a clear picture of what's going to go on. But the key is this, is that going into the weekend, there's always extra fear because remember, the commodity markets close for 2 days, as does the stock market. And so you're not going to have a lot of people holding shorts because they're too concerned about, maybe a massive move up, right? Our imaginations tend to run wild. And so oftentimes you'll see this happening where oil will come in. And I talked about this last Friday as well when we went in the game plan Friday morning when this thing was shooting up. And the idea is that, number one, you have the technicals, right? The technicals very clearly here told us that Friday's high was the high. Now, listen, it could have been up overnight, but really that 77 level based on the parallel, that was the high. But also, if you look at history, right, these conflicts that occur in the Middle East, they generally don't have teeth on oil for a very long period of time. There's shorter term factors that pop oil and then oil fades. In addition, we know OPEC is increasing production and the U.S. economy is slowing slightly, albeit not a ton yet, but slowing slightly, which means demand is lower. So these factors, again, led me to be bearish on Friday on oil, and we are seeing oil coming in today decently. All right, on to gold. Let's touch on gold and silver. We'll touch on natural gas, and then we'll make sure to go into Bitcoin. Gold is pulling back, which makes sense. Gold was up on Friday and really for the previous few days on worries about the Middle East. And then we saw, again, kind of, listen, the conflict is still raging, but it's expanding outside of the two countries at this point. And that, again, is giving people the confidence to sell gold as a safe haven asset today, a little bit of a sell, and buy into the stock market. And you're seeing the stock market rebound. Silver today, silver continues to put in what I like to call a bullish consolidation pattern. I still think it could pull back as low as the retrace to the scene of the crime. But again, basically you're looking at bullish consolidation. Any retrace into this area would be a nice buying opportunity unless it fails and confirms below. And again, I would look for further upside on silver. Natural gas real quick before Bitcoin. Let's take a look. Nat gas is popping a little bit. I do know that in Iran, there was one plant. It was a gas producing plant that was hit. And so I think you're getting a little bit of a reflex bounce on nat gas today. But just a reminder, I put this in last week. We're basically stuck in a short-term parallel on nat gas right here, right? So again, I don't see anything of interest here. There's no trades that I am focusing on. All right, Bitcoin. Bitcoin again came down last week, kissed this support range, and is floating back up. At this point, we're basically going into what I would consider a wedge pattern formation on Bitcoin, right? So if we take this trend line, look at this trend line here. It's actually a great one. From these lows to this low, right to this low. And then you have this wedge pattern right here, right? We have this trend line, which goes back here. You could also do it from these lower points. So it's a wedge within a wedge, which is how markets are in general. But the short term is that Bitcoin is stuck between this area and this area. The question is, which way will it break? And at this point, I still, only because I'm bearish on the stock market overall, do I favor the downside. But listen, Bitcoin can defy gravity, no doubt about it. And if the stock market stays strong, Bitcoin could always break up here. But the point being is when you're stuck in a wedge, respect the wedge. Here's resistance and here's support until proven otherwise. Once it breaks one way and confirms, okay, game on. Price should go in that direction significantly. All right. So again, stuck in a little bit of a short-term wedge here on Bitcoin. It is up today just a little bit, but we'll keep our eyes on it. All right, guys. So listen, this week, Federal Reserve, that's the key. All right. Obviously, we'll keep our eyes on Israel and Iran and the conflict there. But again, earnings, we're kind of in this lull now until about mid-July when earnings will start coming out again. So it's all about the Fed. That's the key this week. Wednesday, 2 p.m., and then the 2:30 press conference with Jerome Powell. You guys have a great rest of your day. Let's go rock and roll, make some money today. Thank you guys so much for all your support. As always, guys, seriously appreciate it. And I'll talk to you soon. Take care.